provide at this spot to strong hands? Rick, are we on the same page here?
Yes, I absolutely love this stuff.
Okay, but
It's great.
are we seeing that supply on bar number 13 is there? It's emergent, right? And let's
Oh,
actually
yes, yes.
write
Oh,
down.
sure.
Let's write down the volume equation here for bar number 13. So tell me what I'm writing here. So volume obviously increases a lot. What is demand doing?
Um, Demand is also increasing, I would say.
Demand is increasing probably the most, right? Because all these weak hands, they're so excited, they're coming in. There are a lot of institutional hands that are coming in at this position as well. So demand is increasing a lot. What about supply?
Supply is increasing.
Absolutely. 15 for 14, for 15. Supply is increasing, but demand is still dominant at this point. We see this by the close. It's still a bullish bar. But because of this increase of the supply, and I've explained this concept today probably already
Mhm.
3 times, but it's so counterintuitive because it's so important for us to understand that on the volume spike, there's always going to be emergence of the supply. And we'll have to kind of double check as to how that's going to unfold. But this emergence of the supply suggests that this is institutional signature, and therefore institutions are selling. And if institutions are selling, then what could we expect, Rick?
Then should have. Then we're going to be looking bearish. Should be a price come down,
Stopping,
stopping
reversal,
action.
and possibly some kind of trading range if we're going to have a stop and reversal action, because we're probably going to encounter some kind of change of character that would suggest a trading range. Again, it seems like, is it really possible to analyze it like this? I mean, like, are we looking at the chart and only because we see what has happened, we could analyze like this? Well, obviously, we're going to know at bar number 38 as to, if we could do this or not. But even just looking at number 13, and with the knowledge that you have, guys, right now on how the volume could be interpreted relative to the price, relative to the structural context, don't you think that at least you might have a suspicion that such a high level of volume signature might produce a stop in action? And it might not be necessarily a distribution. It just might be a stop in action for a consolidation. Those could be, the variations on the theme. All right, great. Eric, one last bar, and then we'll go to someone else. So bar number 14,
Okay.
an extremely huge volume signature that comes. So I only have probably one question for you, and then we'll go on to someone else. So bar number 14 would define which Wyckoff event?
That looks like a hypodermic event right there.
Okay. Probably going to be seen as hypodermic on the intraday level, right? So, and on the daily, it looks,
Right.
like hypodermic as well. 1 bar up, speculation on the way up, urgency to sell on the way down. Okay, great. But how would we label this area, 13, 14?
Oh, I'd probably label that a selling climax. It's almost like a selling climax and a automatic reaction in the same bar.
Damn it. Oh my gosh. I should have let you go on bar number 13. Uh,
Oh,
oh, hold on a second. Are you
okay.
talking about bar number 14 as the selling climax to the low?
Yeah.
Okay, so to the low, we,
No.
we, we could potentially say, yeah, it looks like a selling climax. But I was asking about this spot, I was asking about this high. So this we will identify as a
I was saying that was a buying climax.
yeah, yeah. So a buying
Buying
climax.
climax and then
Uh-huh.
and then automatic reaction.
Yeah, yeah, something like that. Okay, well, really good job, Rick. So I like how you stop to think. Because sometimes what I see in students is there is kind of like this first initial impulse to go to a specific concept right away. But I like how you think about this and then give the answer. And I think that's why you went for like 14 out of 15. So good job.
Well, this is the first time I've ever done bar by bar, but I really like it.
Okay, excellent, excellent.
So
All
I
right,
appreciate it. Thanks so much.
absolutely. Thank you, Rick. All right, let's go to Ronnie. Okay, let's go to Ronnie. Hi, Ronnie. How you doing?
Hello, can you hear me?
Yes, yes, good
Okay.
connection. Okay, Ronnie. So we stopped at bar number 14. Rick said that this is a buying climax, not a selling climax. Okay, let's not go into the discussion how we would label this. There are usually two discussions that I have on the buying climax semantics. Sometimes people would call it selling climax intentionally. I think we've talked about that. And then sometimes, and that, comes from Bruce, buying climax. So this is just not necessary, but that's okay. He wants to do this, so that's fine. So if this is a buying climax, let me ask you this question. Looking at bars number 13 and bar number 14, could we speculate about the bias of a trading range that's going to come? Because we said that bar number 14 looks like a change of character, and that suggests a trading range. So at this point, bar number 14 and bar number 13, could we speculate what bias we could have?
Maybe to the downside due to the high volume on bar 14.
Mm-hmm. Yeah, so we would be thinking the down spread has emerged so much, right? And it just becomes so big. So the result to the downside has definitely increased a lot. Plus, we're seeing that the volume in general increased a lot. This is the highest volume signature on the whole chart. So that suggests an increase, a tremendous increase of the supply. We're going to come back to the demand in a second. I'm going to ask you the question now that also would define for us the result. So we usually talk about the spread. We usually talk about the close. So the close is also very, very bearish. So this is bearish. This is bearish. And then what about the intention, right? So we talk about the result. We talk about the spread, close to close, close to the spread. And then we talk about the intention. The intention was to do what, by the way?
Looks like the intention was to go lower than the close on bar 12, which it failed.
Okay, and I would say, and I like that too. Bar number 12, close, that makes a lot of sense to me, but also the low of the previous significant bar right here at 13, right? But they are almost on the same level there. So that was the intention. It was to commit below. And look at the effort. I mean, the effort is just so huge to go to the downside. Did we satisfy the intention? Did intention come to fruition on bar number 14?
No.
No. So this is an extremely important point, guys. Even though the effort to the downside has increased so much, look at this bar, the intention was to commit below a specific level, and we have not done so. Bullish or bearish?
Bullish.
Oh my gosh. What looks so bearish suddenly becomes so bullish in our eyes, in the Wyckoff eyes, in the Wyckoffian eyes. Obviously, we need to see if there's going to be a continuation, but we don't see any strong continuation in the bars that come between 15 and 17. All of the bars are just attempts to go lower. All of the bars are attempts to commit to the downside. So again, in two bars, bar number 13 and bar number 14, we are coming to the same scenario where visually we're seeing one thing, and then analytically, as we think about it, we interpret it in a completely different way. And obviously for both scenarios, we need a test. So don't think linearly that, oh, the bias is defined, now we don't have to do anything. No, this is just the bias for now. This is a bullish bias. This is an assumption that we have. Assumption for the trading range bias. Does that make sense, guys? Really quickly, say yes. I want to see how you're involved in this discussion. So we are thinking that the bias is bullish, so therefore we're thinking reaccumulation. And now, Ronnie, what we're going to do through this whole trading range, we just gonna confirm this bias. And if we can't find the confirmation, then we will reverse this bias to bearish. And if we confirm the bias, then we will be thinking that phase C is going to be the place for us to open a position or to add to the position. And then as we see the confirmation of phase C, we want to be more aggressive to get into position much faster, to create more size, and so on and so forth. Okay, so I mentioned really quickly this area between 15 and 17, and I said that there are a lot of attempts to go down, and all of them fail. Bullish or bearish?
Bullish.
Bullish. So I'm kind of looking at this as the whole area, guys, right? And we could go bar by bar. We could look at bar number 15. Clearly an attempt to commit below on the intraday level, and then failure, and failure on diminishing supply signature. Next attempt on next bar, next attempt on this red bar, next attempt on bar number 16, next attempt on the next bar after 16, next small attempts around bars number 17, and that all happens on the extremely low volume signature. So that all suggests a couple of things. As I mentioned, attempt to go down, failure, absorption of the supply, and a period that it takes to absorb this supply. Okay, how about a structure, Ronnie? How would we label this trading range, let's say up to point number 17, and what phase are we in right now?
I would say around bar 14.
Mm-hmm.
Was the buying climax with an automatic reaction.
Okay, to the 15, I would presume,
Yeah.
right?
Yeah.
Okay.
So that is phase A.
Okay, well, we need a secondary test.
Oh, yeah, secondary. Sorry.
Yeah.
So next bar is a secondary test to the downside.
And this is a very interesting idea, what Ronnie just said. So we are thinking that maybe the next rally up, and by the way, we had another rally here, would be a secondary test. And someone might say, aren't we testing the highs here of the buying climax? Wouldn't the price has to come up so high? Wouldn't the test will be at point number 19? And I think that we could definitely think this way. Knowing what has happened, obviously, and it's easier when it happens this way, we know that probably the secondary tests in phase A were kind of like very mediocre attempts to retest. And they just didn't go up that much. Why? Well, because there is so much supply on bar number 14. So a series of secondary tests and the conclusion of phase A somewhere here. And then 16 could act as the low in phase B. So we are in, we concluded A, and now we are in phase B. Okay, so Ronnie, if we are in phase B, then 16 would be labeled as
secondary test.
Secondary test. We're testing the levels of supply at the point at the level of support. Okay, great. And then point 19 in phase B will be labeled as
what was that again?
Point number 19 in phase B could be labeled as
isn't that a secondary test to the upside?
You could do that. You could say that this is a test of the buy-in climax, absolutely. We would be thinking that there's going to be always an attempt to upthrust, right? So, but it fails because this is a low or high, so we could also label this as failed upthrust.
Okay.
Okay. All right, and then just because we already see the history, where do you think phase C is?
Bar 22.
22,
20.
okay. But just one bar?
No, I will have a secondary test of that one. So that would be bar 24.
24, okay. So, and where do you think, because we're thinking that phase C for us is all about what? What's the intention behind phase C?
Testing the supply
Yes.
of
Testing
trading range
of the supply at the level of the support. So, and where do you think is the first bar where such test takes place?
Probably bar 21.
Yeah, most likely. So look at how we are first testing at this level the previous support, local support here. That's number one. Secondly, we're testing the support of bar number 18, which is extremely important bar. We're going to come back to that. And the bar number 21 is the first bar that has that test. So this should be the beginning of phase C with that bar. And then the conclusion is going to be not at 22, but as Ronnie has said, some testing action at 24. So that would be our phase C, and then obviously everything in between is going to be phase B. We'll talk about phase D later on, but Ronnie, let's come back to phase B, and specifically I want to talk about bar number 18.
Yeah.
So this looks like a very bullish bar.
Yeah.
And my question to you is, what do you think is happening there? So let's write the volume equation first. So the volume is increasing a lot.
Yeah.
What does it mean
volume
for the demand?
High demand.
Okay. So please note, guys, that this is, at that point of time, the third highest volume signature. So a volume spike. So demand is increasing a lot. And then what do you think supply is doing?
Increasing as well.
Why?
Looking at the tail at the top, it's the supply coming in.
Yes, but the tail is not that big, right? I mean, like this is the tail. So relative to the whole body of the spread, it still looks extremely bullish. It's in the probably what, the top 10% for the spread size. Okay, so we know that from just the volume increase itself, supply is increasing. But I'm gonna challenge you and the whole group to give me a different answer. How do we define the emergence of the supply on this bar? How could we extract this information from which other source maybe?
Compared to bar 13?
Ooh, oh, so good. And I see here Nailash, Nuri is also suggesting the same thing. Compare to bar number 13. So Ronnie, why would we compare to bar number 13?
It has the same volume signature.
Yeah, it's the analog volume signature. Look at this, guys. Analog volume signature. Okay, great. So, and also spread-wise, we also have two bullish bars, right? And they are both expanding in the spread. So, okay, so if this is bar number 18, so then let's quickly write the volume equation for bar number 13. So we have the volume increase, we have the demand increase, as we said, and we definitely said that there is supply increase. Where do you think supply is increasing more? So this is kind of like a tricky question.
I would think supply is coming in more on bar 18.
Why?
Lower spread.
Yes. Great. So now I see that you guys are following me. Now I see that you understand this concept, right? What looks so bullish has a hidden gift, a Trojan horse. It's hidden inside, it's invisible, and it's a limitation of the volume as a tool. We don't see the distinction between supply and demand on this bar. I like this, a Trojan bearish inside. I like that, Eric. So supply is definitely increasing more on bar number 18 than on bar number 13. Why? Because the effort is the same. We see this from the volume signature. There is no difference in the volume signature, so effort stays the same. And yet, the result to the upside on bar number 18 is less than the result to the upside on bar number 13. So that suggests a more bearish scenario, or rather more supply available at this point of time. Now, if that's the case, now the next tricky question, and A for the day, if you're going to get this, Ronnie, does it mean if supply is increasing on 18 more, does it mean that the intention behind this whole swing number 8, to commit above the high of bar number 14 will be satisfied or not?
No.
No. We could see how we could develop this logic, and we could think if we are in the position, let's say swing position, and maybe we open the position somewhere at the lows, maybe somewhere here between bar number 16 and 17. As we see number 18, we are starting to doubt that we could overcome the resistance at this point. So, and we're saying that we need to be probably sellers in this resistance cluster. By the way, Ronnie, number 18, as it suggests the presence of the supply, it suggests that we might not overcome the resistance. Does it also suggest that we still might come into the resistance cluster between 14 and 13, and why?
It's still bullish, so I would guess yes.
Yes, there is still a lot of momentum to the upside. And that's the whole counterintuitive concept right now. I talk a lot about this today, but it's such an important concept. If you get this, I think that your mental thinking is going to be different. You're going to shift into more of a thinking of how institutions behave. And therefore, you will be more aligned with the market itself. Because if you think about how the market moves, the market is not the entity by itself. The market is comprised of so many people, and all of them are just basically with their buys and sell give their opinion on what the market should do at one point or another. So therefore, in some instances, we might be seeing a lot of bullish activity, but on the background, there's going to be already some of the distribution that's going to happen. And therefore, when institutions provide this type of behaviors, they are the ones that are basically creating the whole market structure. They are creating the swings to the upside, to the downside, and then in between, there are some market participants that either provide liquidity at those spots to those larger institutions, or they are able to move the price at certain spots where composite man is not that available and inactive. And we are just following that footstep. We are following that way of thinking. And the closer we are to that way of thinking, the more in line we are with the market movement itself. All right, Ronnie, really good analysis here. With the suggestion that yes, we're going to come into this zone. And now let's look at the comparison between bars number 18 and 19. So let's talk about the effort on bar number 19, obviously to the upside. And look at this effort increase.
Yeah, it's the highest ever so far in the range.
Absolutely. So, and it comes at the point of the resistance here, right? So the up result for this bar is doing what?
Could you repeat? You kind of cut out.
Okay, so what is the result for bar number 19?
It's closing in roughly almost to the 50%.
Mm-hmm.
The 19.
Uh-huh.
Spread is comparable to bar 18.
I would say diminishing.
Yeah,
I mean, I definitely, yeah, slightly diminishing. So let's just write this down. So spread on the 19, slightly diminishing. You set the close to the spread. It's slightly bearish because it's closer to 1/2, as you said. So diminishing spread also bearish.
And the closing price is looks like it's the same as the closing price on bar 13.
Yes. So close to close from 18 to 19. There is no such progression as we've seen before from, let's say, 17.5 to 18. So there is diminishing upthrust on the close. But also a great comment by Ronnie. Look at the close at bar number 13. So instead of closing above this, we're kind of like resting on the same level. And that happens even on the higher, larger effort signature, which suggests that supply is just so present at this point. So close to close, bearish. And then, Ronnie, what was the intention behind bar number 19?
To commit above bar 14.
Absolutely. And we obviously did not do this, so no. Again, very bearish. So everything in the result looks bearish, bearish, bearish. And that's on the increased effort signature, which we said has the significant increase in the supply. What can we expect, Ronnie, from bar number 19? What should come next?
Lower price.
Yeah, we should have some kind of reaction. Now we're thinking in terms of our structure. If we're going to have some kind of reaction in phase B, and we had a test at the support level, now test at the resistance level in phase B, so then the next reaction is going to go where? Into potential phase C?
Yeah.
Yeah. So, and that's how we're combining the volume and spread analysis with the price structural analysis, right? So we're always going to be thinking local picture, and here we're going to say we see how this local picture becomes bearish, and then in the global picture, we're going to say this happens in phase B. So therefore, we are that reaction that we're going to have might be the reaction into phase C. Now, to confirm this, we need to see third test. We need to see second point of fear. And we also would love to see, and this is something that we will study next time, we're going to talk about phase volume analysis. We want to see the volume signature to diminish into phase C. And Ronnie, would you say that we have all three of those?
Yeah.
Yeah, so we are confirming phase C in that way. Okay, great. What else is interesting here? So bar number 21, some additional characteristics. The volume signature has increased here, and then what does that suggest, Ronnie?
Increase in supply.
Supply has increased, yes. What about demand?
Slightly, well, compared to supply, it's down. Oh,
It's smaller
yeah.
compared to the supply, because
Yeah.
supply still dominates the demand. We closed down. But did demand increase or decrease on that bar?
Decrease.
What did you say?
Decrease, down, slightly down.
Mm-hmm. I would say that probably it's up. And the reason why is because let's just look at the intraday picture and blow it up. So we have the previous close, so close 0, and then we have a gap down, right? So gap down. So that suggests what kind of intraday first move? What do you think? To the upside or to the downside?
Probably to the upside, maybe, or down. No, downside.
Yeah, probably to the downside. So let's kind of like put the logic behind this assumption. And then again, we might be wrong, but we will be right more time about this assumption than wrong. So the logic here is that with the gap down, momentum is to the upside or to the downside?
Downside.
Momentum increases to the downside. And then also contextually for the whole swing, are we in the upswing or a downswing?
Downswing.
So the momentum is still, and the bias is still to the downside. So most likely, after the open, we are continuing with momentum to the downside. Then we're coming up back, and we are rallying up to the what? Maybe the high of the previous bar. So we are overcoming the previous close, and then we are selling off. Well, actually, I should redo this a little bit lower, like this, and then we slightly closing lower than the open. So this is the actual. Let me redraw a little bit here. Okay, so here's the intraday action. So we're seeing that, yes, there is some supply that is increasing. There is some supply at the end of the session, but we also see some demand. I mean, look at this intraday rally that we have had. It has closed the gap down. So most likely that happens on the increased demand signature. We also could conclude that the demand is increasing at this point by the way how the tail looks, and with that increased, volumes, overall increase of volume signature. So that would suggest that demand is increasing. But if we're not sure, think about the intraday and think about what kind of rallies and reactions we have there. Ronnie, what do you think?
What do you mean?
Well, are we getting all of this?
Yeah.
Yeah. Okay. Good. So we're shooting for 15 out of 15 here. So, all right. Okay. So next point. So this looks like demand on 21 is coming in, and it also stops the price from moving further down. So kind of suggests a local stopping action. So imagine if this is a selling climax, automatic rally, secondary test, phase B, phase C, right? So we, on the intraday level, could probably figure out the phases here for this trading range and try to enter right there. Okay, so if you are an advanced trader and you have time to follow the intraday structure, then we could definitely do that. Through this structure or through this reaction from 19 to 24, what is happening with supply?
Diminishing with a local spike at 21.
Yeah, so highest supply was at 18 and 19, and then to the downside, yes, this is where supply has increased, and demand came in and absorbed it, and then we're seeing how drastically supply diminishes throughout the whole structure. Meanwhile, well, within this structure, what do we do? And looking at where we are making a high low at the 24. We are making an intermediate high at 23. And so this is intermediate high. And that's on the background of diminishing supply signature. So these are the characteristics that we have seen somewhere prior to that, right? So we've seen it probably somewhere here. Look at how supply diminishes, how it goes and diminishes into phase C, and we're starting to have higher lows and then higher highs, intermediate higher highs. So out of point number 9 and 10, we had a very robust rally. So now that we're seeing this action again, and we are suspecting that this is phase C, what kind of character of a move we could expect relative to what we've had on swing number 6?
Should be bigger.
Yeah, should be bigger, right? Because we're thinking that, well, first of all, causality here is much more of what we've seen in this area right here. Secondly, it seems that there is some institutional accumulation that we've seen on the way up. So if this is a CO type of accumulation, which it is, then we probably would be thinking that they are not going to sell in this trading range, and then the price is still going to go higher. We're also seeing that by the analog that we are going to have some kind of rally. We're just thinking of which character, which type. We're probably still a little bit conscious and suspicious about the supply that's coming in at 14, 18, 19. So in phase C, we know that somewhere in the future we will have to overcome this area. So therefore, we are expecting supply to come, to emerge at the point of the resistance. Now, this idea suggests that still duration is going to increase. If duration is going to increase, then the cause is going to increase, and then our targets are probably going to increase, and we're probably going to have, a better rally in terms of how much it rallies distance-wise, or the way of how it rallies. And we probably could see this 1, 2, 3, 4, 5, 5.5 maybe. So 1, 2, 3, 4, 5, 5.5. So this is the distance that we would be expecting, one-to-one distance, if we would be comparing this type of these rallies to each other. But as Ronnie said, we're expecting the better rally. So the betterness of the rally could come in the extra distance that it could travel, and we see that there is actually some extra distance that has been traveled. So that's one of the things that we could always consider when we're discussing the character. Okay, and we said that we are expecting supply to emerge around the resistance area as the price is going to come to the point of the resistance, and that's going to be a test. Okay, well, Ronnie, let's talk about that emergence of the supply at the resistance. So let's talk about first, let's talk about bar number 24, because this is where the story starts for that supply. So 24 is a very interesting bar because it's not necessarily a very kind of like attention calling on itself bar, right? It's kind of like a medium-sized spread to the upside, medium-sized volume bar. But what do you think is significant about this bar? Is there anything that we could extract as the information on the confirmation of the bias, or what should happen next, or how would we compare this bar to maybe previous bars?
Compared to the volume on previous bars, it's almost half, so it has a much easier movement to the upside.
So the volume signature is somewhat average. Okay, and then on this average volume signature, what kind of result do we get? Well, we also kind of get, average bullish result. Why average bullish? Well, because it's not as big as other bars. So let's say, look at bar number 23, look at bar number 18, look at bar number 13. Those are the bars in the same area. They are at the same price level. So 24 is definitely the smallest out of them all. But then there is a very interesting, significant development here with the volume signature. Look at how the effort is so low, and yet we are capable of producing almost the same result as at 24. Again, effort on bar number 24 is the lowest among all of these bars. And let me just highlight them all so that you would visually see them better. Okay, so all of these bars, and then we're seeing how the effort is the lowest, yet result is almost the same as bar number 23. So 23 is a good analog bar for us. So Ronnie, what does that suggest? Effort is the lowest and result is almost the same.
Bullish.
Bullish, and then how else would we call this type of ability of the price to travel on diminishing effort in the direction of the bias?
Ease of movement.
Ease of movement, absolutely, yeah. So it's an ease of movement, and ease of movement suggests, again, confirms the bullish bias. Okay, great. So then next bar number 25. So this is an interesting bar. We talked about the resistance cluster. So let's talk about the effort for bar number 25.
Up. Volume is almost 3 times higher than bar 24.
Yes, and the bar 24 was kind of like average bullish, suggested to move to the upside. That move suggested that we're going to retest the resistance. And by the way, the next question, and I want you to think about this as we're talking about something else. Bar number 24 suggested not only that we're going to test the resistance, but we might actually overcome it. So the question is why? So think about that for a second. But meanwhile, let's compare the effort of bar number 24 to the analog efforts of the bars that were in the same position. So what would be the analog bar for bar number 25?
19.
19. Why 19 is the bar with the same intention?
Was that a question or?
Yes, yes. Why is bar 19 a bar
It's
with the same intention as bar number 25?
it tried to overcome the resistance
Yeah,
from bar 14.
yeah. It's the same price action. We are trying to commit above the resistance, therefore suggesting that we could overcome the supply that is present at this horizontal level of the bar 1314. So this cluster right here. So okay, great. So effort at bar number 25 compared to the effort at bar number 19 has done what?
Slightly lower.
I would say that somewhat significantly lower. Well, I mean, like significantly lower by maybe 30% or so, right?
Yeah.
So minus 30%. So that's probably a considerable drop. So we could say that 24 is definitely lower than effort at 24. 25 is lower than effort at 19. And then the result at 25 relative to the result at 19 is
Much higher spread.
much better, right? So let's go through this. Spread to the upside is better, increased. Definitely better. Okay. Close relative to the spread.
Slightly above half of the range.
And you know, we might end up kind of like in the same type of percentile, right? So we're on both bars, we're above 1/2, I would say. And we're probably percentile the same. So let's just put it as the same. Okay, close to close.
Much higher.
Yeah, so we are looking at the progression from one close to another, from one close to another. Definitely much better for bond number 25. Okay, and then intention. And here we're going to be doing two things. So the first is the intention. Has it been fulfilled for bar number 25?
No.
No. Now, the second question that I'm going to ask you, in terms of the result for the intention that we have had, is bar number 25 has failed on the intention, how would I phrase it? Is it the better, is it the closer to the success to fulfill this intention on bar number 25 than on bar number 19?
Yes, it's closing right at the resistance line.
Yeah.
And
So
it's a higher spread.
let me kind of ask you in a different way so that, everybody would understand my broken English here. We want to, because the intention is the same, we want to understand what is the result, how close to the final implementation of this intention have we come on bar number 25. And it seems like the close is at least on the first resistance level, so it's much better than the close of bar number 19. Also, what can we say about the actual tail? On bar number 19, the tail does not touch the highest resistance. On bar number 25, not only it touches, it actually overcomes it, and then on the intraday level tries to commit above and to stay there, and then it fails back into the trading range. So bar number 25 is behaving better on the intention than bar number 19. So we're seeing that we have a lot of bullish indications for bar number 25. Spread is better, close to close is better, and then intention-wise, we almost were there. So looking at all of this, Ronnie, is bar number 25 more bullish than bar 19?
Yes.
Okay, more bullish. And this means what relative to the whole structure? Because if 19 was an attempt to overcome the resistance and 25 is better, doing better than that, then what does it mean for the breakout?
It's closer
It's
to a
closer. It's
breakout.
happening now, right? So it might be, you know, whatever supply is coming in, it's less. And for the first time, we were able to overcome the resistance, which is a big deal. So if we are, going to have a true breakout, it's very close. So we are probably thinking that our definition of phase C is actually correct, because phase C defines the timing for us of when the price is going to start leaving the trading range first, going through the whole trading range and above the resistance. Okay, great. Well, we know that by the way, guys, one of the ways to look at the commitment on bond number 25. So I'm looking at this cluster right here, and we're seeing how the price is, the close is definitely below that resistance level. But we also can have a sloping down resistance based on more of the apex action structure, something like this. And then we see how there is a commitment to the upside just based on that. And then look, this is definitely this apex structure that we've mentioned a lot. Okay, let's talk about bar number 26. This is the bar, Ronnie, that produces a lot of questions from students. This is the second highest volume signature on the down bar so far. The previous one was at bar number 14. So the biggest question that I get usually goes like this. Roman, I got into the position at 16 and 22, and then I saw bar number 26. Bar number 26 has the volume increase, or rather than the volume increase, had supply increase relative to the previous point of the supply that we've discussed before. There is only one bar that is higher as a down bar. So I sold this position right there because I thought that this is the supply increase at the level of the resistance, and therefore a distribution is going to take place. Ronnie, what is wrong with that thinking?
Looks like the bar maybe was trying to get lower than the high of bar 23.
Okay, yes. Another
So it,
level here is the low of bar number 25, because that's the previous significant bar to the upside, right? So that
yeah.
we have the commitment. And the close is not committing below any of these two levels. There is an attempt. It goes in between, kind of like goes to one half of this area, and then it sprints up again and comes back above the level of bar number 23. So what does that suggest on such emergence of the supply, Ronnie?
Demand is coming in.
Yeah, so there is some demand. Result to the downside is diminishing. The intention is not fulfilled at all. We did not commit below the levels that we wanted. So therefore, we're thinking, why is it that we are not, as Eric is saying here, in sync between the effort and the result? Well, because there is an opposing force, which is demand, increasing demand, that comes in at this point, and all of this supply is being observed. Now, think of this concept in a different way. Think of this concept as the value zone where institutions are buying, right? So even though the weak hands, institutional hands, might be buying on bar number 13, but not bar number 13 and bar number 14 define that value zone for us, for this particular structure. And above anything above point number 14 will be an overbought condition, and therefore professionals here are gonna conduct a mean reversion trade, because in the overbought condition they would be thinking that there's going to be a reversion to a mean, and therefore there's going to be some kind of trade. They've done this trade at point number 19 already. Why wouldn't it work at point 25? So that supply that comes in is that professional mean reversion trade. And that's why supply increases. Now, as the price goes down, look how it goes into the institutional value zone, just because the bias is to the upside, and anything in this zone, institutions will be buying, and they are buying. Institutions were rotationally buying on bars number 13, 14. Those weekends that were selling, Composite Man was picking up on the liquidity, a lot of the stocks. Then there was, so let's just do this. CO rotational accumulation, and now it's at the higher level. This is institutional trend followers are trying to get into this position, and they're coming in heavy. And then, professionals are just selling into this as they sold into this area. So professionals are doing mean reversion trade in all of the three places. And look at how the first time the mean reversion trade produced the largest reaction, then a smaller reaction, and then even smaller reaction. And that's on the background of somewhat diminishing effort, and result is diminishing. So what is going on? Well, they are observing the shares at this level, then at this level, and then at a higher level. By itself, the absorption at a higher level suggests what, Ronnie? Ronnie, are you there?
Yep.
Yeah. So absorption at the higher level now suggests what?
Higher demand.
Not necessarily higher demand. Demand might be actually lower. I mean, the highest demand was somewhere here at the 13, 14.
The value zone has changed.
Yeah, so the value zone is changing. That's number one. So the institutions are seeing value at higher price. This suggests a confirmation of up bias and suggests that the rally is underway, and the breakout is going to start right now. And here we go. We are observing the supply that is emerging at the higher level, and it's almost like a staircase. You kind of have to observe the supply at different price levels, right? So observing the supply somewhere here, and then we're observing at the higher level. Once the absorption has been completed at the higher level, now we could freely move to the upside. And now the price is going to go up in a much better, more kind of like controlled way, where supply is not going to be a problem anymore. Why? Well, because all of the supply that has been at this level has been absorbed, and all of the price levels have been tested. Okay, great. Let's see what time we have. So let's conclude this whole thing. Ronnie, thank you so much.
You're welcome.
All right, now let's go quickly say yes again, because I don't remember who said yes to volunteer, and we're just going to conclude this. While you're thinking about this, guys, let me just go to the next bar. Number 27. Here's that volume signature right here. So here we are thinking about comparing it to 25. And even though the spread is diminishing, but look at the close. It's much better. It's actually the highest close so far in this trading range. We had the close at 13, 19, then 25. So we have the progression of the closes at the point of the resistance that suggests that after 25 and 27, we're probably going to go up, and we're just going to have this continuation to the upside. It also happens on the smaller volume signature, on diminishing volume signature. So a much better result, on lower effort suggests not just bullish picture, but also suggests ease of movement. And ease of movement starts to appear when supply is poor. And if supply is poor, then the rally is happening now. Okay, and we'll talk about, how we would trade about this maybe later on, maybe next time. But 27 confirms that we're about to go up, that we're most likely going to overcome 25. We do on bar number 28. Now, 28 has very interesting characteristics because the volume has increased, and that suggested that supply has increased. Also, we see that slightly the spread has diminished ever slightly relative to 27. What does that suggest? Well, that suggests that on the increasing effort signature and emergent supply and diminishing result, we're going to have some kind of short-term reaction. This reaction, we are not expecting that there's going to be a very big reaction. We're expecting that supply signature is going to be lower than on bar number 26, just because supply has been absorbed in this area and supply is diminishing. We're also expecting that maybe a reaction by itself is not going to be as deep. Well, it was definitely probably in line with what we've seen after the 25, but slightly less. So 28 to 29 is slightly or equal to 25, 26. And what else we could say is that sometimes look at the reaction through the closes, right? So from the top to the lowest close, right here, from the top to the lowest close, right here. So that shows you the commitment of professionals as to where they're gonna, stop selling, and the levels of where the buying is gonna bring it on the down bars. So much better picture. Plus, we're thinking that okay, this is phase C. We've just committed to the upside, minor sign of strength, major sign of strength, and then the backing up action. We are concluding phase D here, and now we're going to go into phase E, where we're going to travel more freely. And actually, the final absorption of the supply, and we see how supply has diminished, this suggests the timing by itself. Timing for what? Timing for up move without a lot of supply. And if that's the case, then we could be expecting that the character with which the price is going to move, just because supply has been exhausted, is going to be acceleration. This means that we're going to have the spread increase. We're going to have momentum increase. We're going to have velocity increase. And we're going to probably have the volume increase as well. Why? Why would the volume signature increase? Well, again, we are coming out of the formation, so the weak hands are going to become very excited. Oh boy. If the weak hands are excited, there are a couple of things that we should be thinking here. If weak hands are excited and they are providing liquidity, then strong hands could come and sell. And usually this type of action is going to be associated with what? With the climactic run. I do not know what is going to happen at this point if I don't look at the chart the way how we look here. But I could deduct as to what possibly could happen, what possible character we're going to have as the price moves up. And here we go. We're definitely doing exactly that. Supply is diminishing in this area. We are above the area of the resistance after the major sign of strength on the backing up action. Now there is no resistance, there is no supply. So the next thing that's going to happen is momentum is going to come in heavy, and that's going to increase the velocity of the price to the upside, and that's going to be on the background of weak hands buying at this point of time. Usually weak hands buying on the point of excitement in the uptrend, which is going to be defined as the first point of excitement, most likely on the climactic action. And always when weak hands are buying on that first point of excitement, that will define the value zone for weak hands. This is where they will be always buyers. They will be thinking about buying here, and then when the price gives them the value, they're going to buy again. They're going to buy again, something like that. Okay, so 31 is interesting because of the volume signature. It's huge. It's the largest volume signature than we've seen from prior bars. And this is what, 1, 2, 3, 4. Out of the 5 areas, 5 volume signatures, this is the highest. And obviously a very bullish bar. Again, this is probably the theme of today's class. And I want to see this in your notes. How does this bar number 31, looks to you? Doesn't it look so bullish? Big spread, new high, uptrend, conventional T, volume increase in the direction of the bias confirms that bias, and yet look what happens next. I want you to think about this over this week and think about why we're doing this work on volume and spread analysis. What looks so bullish is hiding a secret, a Trojan horse. It's hiding the presence of institutional selling. And we only know this because the volume increase, the volume spike, suggests that in the direction of the bias, the force is increasing. But so is the opposite force just because of how large this volume signature is. If all of this would be demand, what would happen? We would go to the moon here because there would be fewer sellers, and the bias would dominate in a very extreme way. So we're not doing that. We're not going to the moon here. Yes, the move is quick, the move is big, but it doesn't mean that it's all demand. There is some selling that is happening, and this is an institutional signature here. If the selling is emerging at this level, institutional selling, that is, then we could be expecting a stop in action, not necessarily right on that bar, but in the area, reversal, and with that, a possible change of character, which could lead to a trading range. And in the trading range, we will have to go again through the bias analysis. But at least we are thinking that if we are in a trade, we are somewhere close to the intermediate stop in action. And bar number 32 starts to confirm that, because the effort of bar number 32, it's still a very high effort looking at all of the bars that we've seen before, right? So we probably would be thinking that the effort on bar 32, even though it's diminishing relative to bar number 31, but we also seen that the result at 32 is much less than at 31. How do we see this? Well, the spread is diminishing. The close to close is much more mediocre than at 31. The intention was commit above. We did this, but marginally, not a lot of close above the level of the resistance. So that suggests some kind of weakness and suggests some kind of bearishness that might come. So suggest a reaction. So with the reaction in the next class, and I'm going to stop here, it suggests on the reaction, we need to make sure that we judge the character of the reaction, and we understand, at least we could speculate what kind of buys we're going to have for this trading range, and so on and so forth. Bar number 33 confirms that supply is increasing, confirms that we're going to have a reaction. And at this point, if you are a long-term investor, then you're thinking about maybe hedging. If you're a short-term trader, then you're just out of the position. That's it. You might be also originating some short positions for short-term trades, because your target is going to be somewhere at the bottom of this bar number 31. All right, guys. So let's stop here for today. Let's review the homework. So the homework is going to be of two parts. Watch this video again. And secondly, I want to receive your exercise notes. So this is what we're looking for. And if you have time, be serious about this assignment. I want you to get into it. I want you to stop the recording and put those notes in. Go through the analysis again. It's going to be extremely helpful. I know it's really tedious. I know it. It's kind of like the thing that in order for you to gain a momentum with your analysis, you have to be extremely slow at the beginning, because you really, really have to understand it and see the concepts on the chart. Okay, so that's homework. What else? What else I wanted to say? Oh yes, some comments and questions. Mm-hmm. Okay. Mm-hmm. Okay, so from Nailesh. Okay, bar number 18. And we went through this, but let's just confirm this. Short-term bullish, yes. There's still a lot of momentum that's going to carry us into the cluster. And then long-term bear, short-term bullish, long-term bearish. Not necessarily long-term bearish, right? Because we're thinking, what is the bias here? So the long-term bias is going to be for related to this whole structure, right? So that's why long-term. The short-term is related more to the swings. So when we say that supply is coming in here, we know that the short-term bias is going to be bearish, and then the long-term bias that relates to the whole structure is still bullish, because we're thinking that this was bullish, and then possible next reaction could be bullish. Would we add or enter position on bar number 27? And this question comes also from Nailesh. Yeah, yeah, this is a good place to initiate the position. So our places to initiate the positions are going to be bar number 23, 24, 26, 27, bars 29, 30, and that's about it. So quite a few spots here where we could open the position. Okay, on a reaction such as 25 and 26, compared to 28 to the following low, could we conclude similar result, but actually greater volume, since the volume of the two bars is greater than the volume than the single bar from L? So we are looking at maybe this against what? Against this. So the volume signature diminishes, and I'm not taking this bar into the account, although I probably should, because some supply is coming in here. Okay, so maybe like all of this. So we would have to look at the cumulative volume on those two reactions. To me, just visually, I kind of like look at the down bars and the volume signature there. So to me, this is a significant decrease. So even though some sell-in comes on 28, 28 and a half, you know, still that signature goes down and goes down rapidly and significantly. So it looks very bullish on that second reaction. Would CO also be selling in each of points of excitement, or is it only institutional strong hands? Yeah, CO definitely has an agenda to unload their positions at the most opportunistic times. And the most opportunistic times are going to be the times where liquidity is going to be the highest. So this is where they usually scale out, take profits, and then, you know, if distribution is going to happen, you're going to see it in a specific way, right? So you're going to see the increase of the supply signature, you're going to see the consistency of the supply, and you're going to see that the result is actually following that increase of effort to the downside. But yes, CO definitely would try to sell in the points of excitement, because points of excitements always provide that liquidity. Roman, from 33 to 35, can you reduce the bias? Each time the bulls want to go up, strong selling appears. Is this a distribution? All right, Eric, well, definitely a good question. Let's just discuss it next time. And as an assignment, definitely analyze this area right here. And just to go with our spreadsheet here, and analyze this area, and come to the next class prepared to discuss this area. So let's leave it for then. Okay, Rick is saying, thanks for the bar by bar analysis. This is really starting to all come together. I'm glad to hear that, because I know from my experience with, you know, either doing this by myself or, you know, working with students traders, it takes time. You first have to reverse your thinking. That's number one. And then after you understand the concepts, then you have to practice. Once you practice this enough, believe me, this becomes a second nature, and you kind of see those concepts much faster. All right. Do you ever employ the Weiss wave to analyze and compare swings? Yes, absolutely. I actually do have David's software. So we're talking about David Wise Wave. You could find this plugin on his website. I'm not sure if it's you could do this for all of the software packages, but at least on TradeStation you can. I know. I think MetaTrader or some other platforms where he sells his product. I would definitely recommend this. I also believe that cumulative volume, you also on some of the softwares, it becomes almost like a standard now. So standard feature. So I'm just would look into that as well. But yeah, go to David's website. Anything that David produces, I definitely recommend. And you guys know me. I don't really care about the competition among, Wyckoff teachers and all this stuff. It just all kind of like sounds unreasonable to me. You either know the stuff or you don't. So David is one of those big titans in the method, right? So we had Wyckoff himself, then we had Bob Evans, then we had SMI with the series of teachers there. Then we had, big four names in the 70s, 80s, 90s, 2000s, and up to present, some of them. We had Tom Williams. Tom Williams has passed away, and his field was VSA. He wrote a book that usually students have a little bit of a hard time, to read. So maybe not a really good adaptation, but still, I would, if you're a true Wyckoffian, I would definitely have that. Then we had Craig Schroeder, and Craig Schroeder was for a long time the SMI contributor, SMI principal teacher, and he has developed quite a lot of concepts. Then we also have had Hank Pruden, and Hank was really big on structural analysis and PNF. And then we still have, and this is the only person. Well, actually, I'm not sure about Craig. Craig is, I think Craig is still alive. So David Wise is definitely still around. So David Wise, on VSA, volume, and sprints up thrusts. So David has done so much work on this. So those are kind of like the four big names for the last 30, 40 years that you could go to these people and study their work, and it's all going to be complementary. And then after that, obviously, next generations that came, Bruce, myself, this is from Hank, so this is GGU. And then from SMI, we have Todd Butterfield. So Todd is doing a lot on the cryptocurrencies right now, has a live sessions. And then on Tom Williams' side, BSA, we have Anna Coolin, and it's all where Tom Williams lived, in the UK. Anna Coolin, then Gavin Olms, Peter Friston, and then on, so who else is left? Tom Williams, SMI, Hank. Yeah, and David Wise, David Wise followers you know as Gary Dayton and Gary Fullett. And all three have presented at Wyckoff Analytics events. Todd has been a big friend. Gary and both Garys have presented. Gary Fullett just recently. David Wise has been at the Best of Wyckoff. So I'm still trying to get Anna and Peter, to come to our community and just to present. So that's kind of like a history. And if I would put, something before, so Wyckoff himself, then Bob Evans as a part of the SMI, and then everyone else, and then Craig Schroeder and so on and so forth. Okay, Rick is saying professor is enough for now. Okay, great. Yeah, we're gonna stop here. So 3 hours, that's too much. All right, guys, good class. I wanted to go into a lot of details in this class. I wanted us to practice the counterintuitive read on the bars, and hopefully we've done so. So go practice, send me your homeworks, watch this recording again, make notes, and that's going to be your best practice. And I'll see you guys next week on the 25th. Thank you guys so much. All right. Bye-bye, guys.